What if, this market is just screaming out, it's Nvidia's world and we're just living in it, right? I mean, if Nvidia's up, markets are good. Nvidia's not doing much, S&P can't do that much. NASDAQ's negative today. It's a one-stock story.
Nvidia is really a generational story for now because, how many $3 trillion companies actually have doubled, so clearly Nvidia is important, but it's important because it's really one of the most important ways to get exposure to AI. And I think the AI story is, early innings, as many people talk about. It's transformational in terms of productivity, and there's a lot of use cases developing. So as much as it might feel like a one-stock market, as you know, there's a lot of stocks up more than 20% year to date, and I actually think breadth is likely to increase. So for investors, there's a lot of opportunities in the second half.
Investors who have been waiting for Nvidia stock to decline may now feel that the time is right. Since reaching a top in June of slightly over $140 per share, the price has declined. Additionally, investors should keep in mind that it has twice since 2018 lost more than half of its value. Nonetheless, throughout the previous 5 years, the artificial intelligence AI stock has increased by around 2,400%. In fact, Nvidia's dominance in the AI chip market has garnered a large portion of this expansion. However, in the midst of a tech stock sell-off, should investors buy now or wait for the price of the company to drop? Nvidia was founded as a video game firm and now works in industries including professional and automobile visualization. In recent times, the company's efforts to establish itself as the leading player in the AI chip industry have propelled the stock into unprecedented heights. Nvidia is the market leader in terms of technology, controlling at least 80% of the market, despite rival products being offered by Qualcomm, Advanced Micro Devices, and other companies. Furthermore, the price of its AI chips, $30,000 or more, is significantly higher than what its competitors can charge in this market. However, as was already indicated, the stock dropped in recent weeks. According to the information, Nvidia has been the target of numerous investigations by the Department of Justice over its dominance in the AI chip market, in addition to a general sell-off in the IT industry. The release of its next-generation Blackwell AI processor would be delayed, according to the same magazine, due to design faults. Given that cloud providers like Amazon, Alphabet, and Microsoft may rely on this technology to share part of their productivity benefits with investors, this might have a wider effect on the tech industry. Granted, its finances might not be significantly impacted. Through 2032, the market for AI chips is predicted to expand at a 38% compound annual growth rate, and Nvidia and its competitors have found it difficult to meet the demand. The first quarter of fiscal 2025 saw a 262% increase in Nvidia's revenue, reaching $26 billion. With all these developments under consideration and analyst predictions, we'll talk about target projections and advice in today's video, so make sure not to miss out. However, before you do, if you'd like to stay up to date on Nvidia's most recent updates and the most recent news from the stock market, you can subscribe to our channel. We publish daily updates about the biggest shifts in market catalysts, so click the bell icon button to ensure you don't miss the most recent updates. All right, back to today's video.
Chip stocks losing some steam today as the NASDAQ rolls over earlier gains, giving up some of those earlier gains on that softer than expected manufacturing data. Now, today's move to the downside, what you are seeing play out within the chip sector, follows yesterday's risk-on rally. Actually, looking at yesterday's move, the chip sector recorded its largest single-day gain in 14 months. Who led the charge? Well, it's none other than Nvidia. We want to bring in Paul Meeks. He joins us now. He's Harvest Portfolio Management's co-chief investment officer. Paul, it's great to talk to you again. So we're seeing a bit of a give back following yesterday's gains. Nothing necessarily to get too worried about, I don't think, up until this point. I'm curious, though, what you make about the sentiment, the narrative surrounding these chip makers, and whether or not some of the developments that we've seen this week makes it more likely that we are going to see another leg higher.
I actually think we will see another leg higher, but even in my own tech portfolio, I have a prohibition right now on new buying, at least till we get through this very weird and squirrely earnings season, because as we've gone through this earnings season, some companies are posting pretty strong results. Whenever a company posts earnings, there's always going to be a couple flies in the ointment. I mean, that's to be expected. But companies that have had good things to say, sometimes their stocks go down the next day. So it's just too difficult of a market. I plan to add to my favorite AI infrastructure plays, which would be some of these semiconductor names, data networking companies, and data server companies, but only till we get through the end of this reporting season. Give me about 2 weeks.
Okay, well, a lot of follow-up questions potentially off of that, Paul, but I want to start on whether or not you think come NVIDIA earnings, when given the beats that we've seen from the likes of Meta, Microsoft, Alphabet, and Amazon, all of those make up 40% of NVIDIA's revenue. I know we're still waiting on that last name. Given that we've seen those positive earnings from some of those names so far, do you think you'll regret not buying NVIDIA when they're likely to have a good quarter based on that?
I think I may regret it, but I have such a large position and I've held it so long at such a lower cost basis, I'm pleased to wait. But you think about it, all of their customers, the hyperscalers, we're now through all of their quarterly reports. And the only thing that was not controversial at all was how much damn money they're going to spend on AI CapEx. And so unless they're lying about their capital expenditures are high and potentially even rising into 2025. So this bodes incredibly well for NVIDIA. And NVIDIA is trading at 31 times next year's earnings. It's not egregiously expensive. So I plan to, when the stock settles and or we get through their report on August 28th, you know what? I'll probably.
Over the past few years, Nvidia has been an extremely popular investment, mostly because of its crucial position in artificial intelligence, AI. For businesses creating AI models, the company's chips are essential. Furthermore, Nvidia commands an overwhelming 80% of the market for AI chips. Due in part to the fact that the company is perhaps the best positioned to profit from the rising demand for artificial intelligence, investors have continued to be bullish on the stock. But with AI's wealth of options, it's only a matter of time until additional rivals enter the fray to vie for market share. Recently, Apple has resorted to one of those surprising rivals to supply CPUs for its upcoming AI-enabled iPhone models. Over the past few years, Nvidia has been an extremely popular investment, mostly because of its crucial position in artificial intelligence, AI. For businesses creating AI models, the company's chips are essential. Furthermore, Nvidia commands an overwhelming 80% of the market for AI chips. Due in part to the fact that the company is perhaps the best positioned to profit from the rising demand for artificial intelligence, investors have continued to be bullish on the stock. But with AI's wealth of options, it's only a matter of time until additional rivals enter the fray to vie for market share. Recently, Apple has resorted to one of those surprising rivals to supply CPUs for its upcoming AI-enabled iPhone models. NVIDIA's growth rate will eventually begin to slow down, particularly if more competitors enter the market. If that's the case, the price of its expensive chips might also need to drop, which could result in a slower rate of growth and lower profit margins than the 50% plus margins it has been averaging lately. Though its stock has recently given back some of its gains, Nvidia is still a great business to invest in if you want to be exposed to the booming AI field. Even if other businesses might attempt to overtake Nvidia in terms of market share, it's unlikely that they will succeed instantly. Nvidia is still in a great position to grow, but I would anticipate that its growth rate and margins would slow down a little in the upcoming quarters, particularly as businesses may decide to cut back on their investment in AI as a result of potential slowdown in the economy. Even if Nvidia's stock might not do well in the short run, if you can stick with it for the long run, it might still be a worthwhile investment. So what does this really mean for Nvidia's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on AI-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks, enjoy a limited time 8.1% APY on idle cash for 3 months, and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Moomoo for sponsoring this portion of the video.
Bought all those companies and crunched them except for I wrote it. Consider the case of Nvidia, which is doing amazing things with generative artificial intelligence, generative AI, and accelerated computing. Those are the two biggest trends of our day. Those are basically their own cycles with their own rules, and they have nothing to do with the Fed. That's something we love them for. Not anymore. That's how Nvidia stock has become a wasteland. I mean, it's this interstitial gunfire. I mean, every day. I mean, thank heavens that the market stops. Thank heavens they ring a bell. Because then it can stop going down. Okay, sure, it's still up 110% for the year, but it's now down more than 35 points from its high, 140 to 104. I don't see it stopping here. That's not because Nvidia's business has deteriorated. Its products are selling amazingly well. Its competitor AMD on tomorrow and Squawk on the Street saying good things. It's because Nvidia doesn't benefit from rate cuts, so its stock gets kicked to the curb in this environment. The money you get back from selling the company's shares that are being redeployed are to the rate cut beneficiaries. No insult to Nvidia. It's about the stock, not the company. So why not get rid of the stock? Because Nvidia stock is getting cheaper as it goes down. Right now, the street expects them to earn $3.59 per share next year. But if this is anything like the Nvidia we've seen in the last decade, those estimates are probably way too low. Maybe so low that the company could eventually earn $4.59 per share next year. In that case, you've got a stock that's conceivably selling at less than 23 times next year's earnings. I am not selling the greatest growth stock of our generation at 23 times earnings. I'd rather risk taking some pain. And maybe then, keep in mind, Nvidia is the premier growth stock of our time. I'm going to say it again. It's not going down just because skeptics feel there's no good return on investment AI. It's going down because Wall Street's become a lot less willing to pay up for the earnings of growth stocks. It's called multiple contraction. Right now, investors would rather chase cheaper stocks of companies that will get a massive earnings boost from lower interest rates. Think Stanley Black & Decker. Wall Street at certain junctures falls out of love with great growth stocks, abandoning them for cyclical stocks that will do much better in an accelerating economy. The year-over-year comparisons are just much better with these rate cut beneficiaries than they will be with the Mag 7. The market runs on these companies. But at some point, a stock like Nvidia gets so cheap, so darn cheap, on an earnings basis, can you believe it, that the selling will stop? We just haven't reached that level yet. I don't mean to be picking on Nvidia. Microsoft, Meta, Amazon, Apple have all been experiencing multiple contraction. Meanwhile, stocks like Stanley Black & Decker or the banks are experiencing multiple expansion. Glorious. Now, we hear that many smaller cap stocks are winning here. It's a big tax donate share to them. Donation is a very tricky word, though. What's really happening is that big institutions aren't doing anything different than they usually do. They always sell the stocks that don't need the Fed to make the estimates and buy the stocks that will put up huge year-over-year earnings growth with the help of rate cuts. Of course, there are stocks that are basically bits and bobs. Procter & Gamble and Merck missed the numbers today. I can tell you if it weren't for China, those stocks would have actually gone higher. I'll go over China losers later in the show. Eli Lilly keeps going down because it's been up a lot. It suddenly has GLP-1 competition. But it's also suffering from the same multiple contraction as the Magnificent Seven. We don't know when that will stop either. A quality company, real bad stock. It's so easy to just dump all the great growth stocks that have done so well when you have cycles based on cell phone refresh or PC refresh or AI or accelerated computing. You sell them and you will feel so instantly relieved. You'll be like, oh, a steamer trunk removed from my back. Never forget, though, that you're selling winners, actual bona fide winners for stocks that were losers just 2 weeks ago. Selling winners for losers is indeed a longer-term a mug's game, unless you think this rotation has immense multi-year staying power or you're a hedge fund with the ability to flit in and out.
Barclays strategist stated in a note released on Friday that Nvidia's next earnings report may be the next significant driver for big tech stocks. Amid the myriad macroeconomic variables that have escalated cross-asset volatility in the past few weeks, apprehensions regarding AI expenditure have moreover affected stocks. Since of this, experts said that Nvidia's Q2 earnings on August 28 will be carefully monitored since they may hold the fate of the big tech versus rotation trade. Investors are beginning to doubt the high spending. Even if AI-related capex from the tech giants has historically been strong, they added, given that true AI revenues are expected to take longer to materialize. Nevertheless, Barclays believes that the nearly 30% decrease in some of its major companies, like ASML, and the roughly 16% decline in European tech equities may have been excessive. They decided to re-enter European tech this week with an overweight position due to this expectation. The investment bank states that it prefers the quality and potential for long-term secular growth that the tech sector offers over the value cyclical nature of other faltering industries like autos. With all of these considerations, Nvidia is unquestionably a great buy, especially if you're looking to invest for the long term because the company hasn't reached its full potential yet. What do you think about Nvidia stock? Is it a good buy at the current price? Please share your opinions with us in the comments section, and don't forget to let us know what you think NVDA is worth. If you're interested in learning what other companies, like Nvidia, have been up to lately, click on the next video on your screen. We'll see you there.